Good day, good day, good day, everybody. Thank you for people that may have watched my video I put up yesterday on de-dollarization. Uh, Even though I got a whole whopping, I don't know, 40 views, it's good old YouTube doing what YouTube does best. So I'm posting a bunch of videos just to test people's responses and see what would happen. So we'll see with these three videos I'm putting up today. So today is March 29th. 4:14 Eastern Standard Time. All right. So this is an important, very important article, and I've not read it. I just saw it in my little news consumption feed, and I thought instead of whining about stuff going on, let's talk about solutions. So this article is called "From Cointelegraph: How to Financially Prepare for a Recession. Stay recession-proof. Build an emergency fund. Cut expenses. Diversify investments. Pay off debt, and enhance your skills." So okay, so build an emergency fund. So blah blah blah. Um, like this is so obvious. This I don't know if is really lazy journalism or really nothing uh really new, and we know this. So we got to build a emergency fund. Well, most people don't. Most people are supposed to have like 4 months of salary to get by, and if you're laid off, and especially in this economy, um, it might take you a while to get a job. Let alone we've not talked about chat gpt. I did a topic on this on Monday night, my webinar, how chat gpt may displace a lot of people, and then there was just a letter put out by a lot of influential people saying they want to regulate the AI because it's going to have such a negative impact on the humans, and especially for career, not jobs, career. So that's not helping. So that emergency fund may go so far. Pay down debt. Here's my belief on debt. Um, Debt, there's a lot of people. I was just listening to some video, I don't know who it was, but where a couple with a negative credit score had a fairly new car that they couldn't afford. There was a $45,000 car they went in and negotiated in, and they still owed $17,000 negative equity. So what the car dealership did says, yeah, we'll give you the car, plus we're going to take your loan of 17,000, put it up into this $62,000 loan from the car dealership, not a bank, dealership, and got this couple to sign the agreement. They have a brand new car that they can't clearly afford. Plus, the dealership now gets an extra loan of the $17,000. So, are these people cutting back on their spending, or let alone discretionary spending? No, no. So, as long as people do this, that doesn't bother me personally. But what bothers me is when you get bailouts from government for bad management on banks, like the Silicon Valley Bank. That's where the taxpayers still on the hook, and that they have other people, households making these kind of bad decisions. My view of it is, do you really need this? Do you really need that? And cut it all back. I live what I call the cockroach life. Okay, I'm bare bones. Um, because everything when it comes to cash flow is king. You don't have the cash flow to keep up to date and up with your expenses, be it including inflation, you're in trouble. And no matter how you slice it, you're going to have a problem. So, what to do about it? Obviously, really, really, really cut back your expenses. Like go through absolutely everything. And most people will have automated expenses coming out. When you look at it, you'd be shocked. I'm still paying for Amazon Prime, and I've been like that for 2 years. And that should be happening, but it's happening. Little stuff like that that really add up. So obviously you got to cut all that garbage out. Diversifying investments. So here they say crypto, bond, stock. It seems to be that everything's going down together. This is why you need to find uncorrelated assets from one to the other. Meaning, um, if I don't know, being in the stock market entirely, it's not diversification. Um, Artwork, I don't know. what goes up when things go down? Well, when I look at ETFs for gold, treasury, and silver, all those went up, elevated in an elevated way, uh, March 8th, which happened the day before SVB went belly up. And the situation there is, even though you're diversified in treasury, gold, and silver, it's all about timing because as I keep talking about opportunity cost, the time to get in those assets would have been on March 8th because you have a calamity to get into those. So how do you get into those particular assets? ETF's a pretty good way. Okay. Then they're gonna say, well, paper ETF or paper money is no good because you could lose it all. If you're buying into large companies like, dare I say, BlackRock and Vanguard, sometimes you have no choice, but um, you have to go with these evil entities if you want to save your skin. There are other ETF providers out there in terms of stability. I can't say, um, but uh, from my perspective, it's better than just being in a sinking ship. So ETFs is a decent, interesting area to put money into. Um, Technically, you have to check with your regulator if those assets that you hold are going to be insured up to a limit. For most people will not breach that limit, and if they do, what the wealthy are doing with the $250,000 insurance from the FDIC, they'll be insured on the first quarter million. Some people may actually diversify across, let's say, I have $1 million, so I'll split up my $1 million and put them into four separate accounts. Uh, when they're theoretically insured for that, among four accounts at a quarter million apiece, they should be theoretically insured. But if things go bad, um, it's not going to be a guarantee you're going to be insured. So if you're above, let's say, a quarter million, what people are doing now is they're pouring money into money markets because they're kind of like protected because that's federally protected as well and it's stable. So if anything happens with a bank, you're still okay on the money market. In terms of crypto, look, I like crypto a lot. I think no different than any other asset, like let's say Bitcoin. When there's a catalyst, it moves up. There's other cryptos doing very well. Some have already doubled. But again, that could be a temporary rise in a particular coin, and it may drop back and go parabolic. So, do you want to maintain that full time? Probably not. I think exposure to Bitcoin, Ethereum is good, but maybe at best 5% at most of your total portfolio. Now, real estate's a different matter. If you live in a piece of real estate, in a home, um, that's going up in value, living in it, you don't worry about it. If you're trying to play the real estate game by having multiple residences, depending upon who you are, if you're a full-time tradesperson, yeah, it makes sense because you're able to go in and be a handy person, fix toilets, fix fences, whatever you got to do as a landlord. They're able to do that, great. Once you start hiring a property management or hire out for some kind of handy person to do a job, that's an expense. So there's that. Plus you have the insurance for the home. Then you have property tax. So those are expenses and those become liabilities. So again, you want to deal with those headaches on each and every property full time. There is benefit of rental income, but guess what? That's pretty extreme. Why? When you look at the global sickness in 2020, what did they do? They allow tenants to live in homes or apartments that people own, and they have a mortgage to pay that they're depending on the tenant to pay indirectly. The government says, no, no, these people can stay. If they can't pay the rent, they can't pay the rent, but they can stay. So now for up to a year, you're on the hook and your tenant ain't paying the bill, right? So that's a very, very, very dangerous game to play. And will that happen again? Very likely. I have my reasons for a variety of reasons. I'm not going to get into them here. Um, and if you want to know more, actually, probably a good place to go is you just go onto my private chat server at quantlabs.info. Boom, there it is. So you can go there, talk privately, anonymously, and express yourself, as they say. All right, coming back to this article. So diversification, yes, I kind of agree with, but not the way that these lazy journalists say. Uh, the better places to go, easiest places to go, let's say real estate, ETF. Get a REIT, a real estate income trust. If it's profitable, the REIT, you'll get an income. Um, some would say, so here's how you know that this is not a good article. They don't mention dividend income. That's what a lot of people are also doing. The problem with diversifying into or relying heavily on real estate, sorry, uh, dividend income, it can be cut and it can be totally eliminated. Um, I think a lot of companies are doing that now, but there are other companies promoting it. So it's just a company's way to stay uh, valuable and to stay relevant in the stock market, let's say. Exxon's a great example of that, where they're moving into less growth because it's oil, obviously, and moving more into value by issuing dividend income. So, you got to also understand when you put money into a company, let's say 100 grand, some people are 50 grand, and that's a stock, right? So if that stock starts to lose value, a great example is this. I did, and I keep pointing to this, and this is again real estate. If you go to Yahoo Finance, you look up a company called Realty Income. Okay, they're one of the higher. Oops, they're one of the higher uh, dividend payers for real estate. But when you look at the 1 month play is losing money, 6 month play, eh, year to date losing money, 1 year, 5 year. Okay, so you're essentially either losing money and maybe at best over 5 years range bound. So you're tying up money yet again, opportunity cost. You tie up money there, all in the name of to get a dividend. So let's say if it continues to decline, um, you're essentially netting out with a bigger loss than what you're getting the dividend income. So people just do the dividend income for cash. Not I mean, I'm not saying it's bad, but it really depends on the company. Another example is banking, Silicon Valley Bank. Okay, this should have been a big red alert for a lot of people. Okay, if you know you're doing well here in 2020, great, and it goes up, great, for a year, great, awesome. That's your bank. That's where you hold your deposits. But look at the plunge from 646 all the way down to $106. So it's losing five six, right, in value, and your money's parked in this bank. Like that should be a huge warning sign to you, a red flag, like FTX. Like that's where your money is. They go belly up, and now your money is now in jeopardy, and you're relying on the government to bail you out if they can afford it as well. So is that smart? No. So real estate income's not smart at all. But you really, really, really got to research your bank. You got to really research your your dividend income as well. Let me find my article here. So diversifying, you got to be very careful. I've talked about crypto as well. Stocks, it exists. Yes, you can beat the market, but you got to stay on top of it. That's what I do for people to help them. Uh, Actually, maybe it's a good time to do this. Uh, if you want to know more about that, as I said, you got the private chat server, and the other thing to look at is this one, the Quant Labs Net books, quantlabs.net/books. And again, I give a PDF and a whole slew of videos you can watch for free for further stuff. So just opt in there. and boom, you're ready to go. All right, coming back to the article. So diversification is important, but this is not the this is the lazy way. Gold, it goes up, goes down, and it comes back from 2012, the value of it, 2020, 23. It's now like recovering from where it was in 2012. So if you had money, if you had gold like money tied up in gold all that time, again, opportunity cost. When you could have taken that money that you deployed into gold, you could have put it elsewhere. Let's say just the general stock market, you would have made more money holding equity than you would have gold, right? Or the run up of Bitcoin from the 19 grand to over 60 grand per coin. Okay, a lot of people don't like to hear that. That's okay. If they don't want to make money, they don't want to make money if they don't believe in crypto. And crypto is doing very well right now, especially Bitcoin and a bunch of others. So you can diversify, but it's really all comes down to timing, which is very difficult to do. So yes, all of these are good to do the typical buy and hold. I don't know. I don't know. I mean, if you look at just stock alone, it went down 20%. So um, diversifying ones that can provide some that should be underlined, some stability in an economic, because it's all really correlated, right? It's all of this is correlated, especially 2020 and 2021 prove that, or 2022 as well, with all the fiascos that we've already gone through. Consider your job security. Now, this is where the good old chat GPT comes in. So that's another concern a lot of people should have. It's not about job security. I replace that with career security, right? So people are making money online, but there's a lot of scams and stuff going on. So be careful there. But career, yeah, I'd be really, really, really concerned about that, depending upon what you may be impacted by ChatGPT and the like. Um, I do know, from what I understand, trades is a good place to be. Are they really going to replace something that can do a hammer or something that can fix a toilet? The AI may have some difficulty there. Like, you know what I mean? So I think trades is pretty safe generally. I don't do trades. I'm a computer guy, right? Um, so that will help. But with the mass immigration going into countries now, it's going to be very difficult to hold and get a new job, most likely because now you're competing against with new immigrants have come into your country, and we're talking like Canada alone, 1 million people. That's like insane, and most of them come to where I live in the big city, big smoke, Toronto. All right, so I can tell you firsthand experience why IT people have a very suppressed income in Toronto, even though everything else has gone up in price, including tax, is because of the amount of immigration coming in, suppressing those salaries, and corporations love it because now they don't have to pay out what they do in the US, right? So they love that. They love immigration, and because they can keep salaries suppressed. And now they have Chat GPT to even displace a lot of people. Congratulations. Are cryptocurrencies recession proof? I don't think so anymore because it's proven that Bitcoin, everything follows Bitcoin most of the time. Um, that correlates around some bad news in the markets. Example, everything went up with Bitcoin. Great. And along comes the US government, Europe wanting to clamp down and threatening to sue this exchange like Binance. What happens? Bitcoin goes down. So, and when you look at the price of value of Bitcoin, how it's dropped probably 80% in the last 2 years, it's kind of coming back. But again, you just don't want to have your uh, portfolio too concentrated on crypto. Otherwise, you will get smoked. And that's why I've been reading about these crypto billionaire therapy clinics at a 400,000 a month. All my sources come from one person, so thanks to them for that. But it's a reality. So, how do you diversify properly? Well, a lot of these, what's mentioned here, uh, it's true, but it really comes down to timing and to know about opportunity costs. And a lot of people say, well, I don't have time because of a job. That's fine, but it will impact your retirement. Let me just go over to my community. I did put this up. I haven't checked it lately. I put up a survey on this. So let's see how it went. So we've got, nothing's changed. I have a very engaging community, I must say. But even though it's 11, you can kind of suss out the direction. 45% say they're worried about career or job loss due to AI tools like ChatGPT. Number two, which I think is a bigger concern for a lot of people that get closer to retirement, is dropping retirement portfolio. So when you look at the likes of France, where they're burning down the friggin' country, all because they're just going to add another 2 years to retirement, it's quite clear that that's a way of the French government saying, well, we can't afford to keep doing this. So we're going to have to make you work longer and make it harder for you and longer to wait to get into a retirement plan issued by the government called a pension plan. And the states, I wouldn't be surprised, will raise it all the way up to 75. Same with um, Canada and probably a lot of other countries as well that have a pension plan. And they're hoping that you're dead before then, right? Um, so, like, that's grim news, I know, but it's reality. But right now, people are rioting in the streets in France all because of 2 years. So you can't really rely on that. People are worried by the looks of this. I'm worried about it, but you'll be working till the day you die. I mean, that's the simple reality. And if you have a knowledge-based career and not a labor intensive, working in a factory kind of thing or fixing toilets is a good example. The day you're not able to do that no more is the day you lose your income. So yeah, it's better to be in a more knowledge based career, I think, but being able to navigate this, the chat GPT, is not my call, right? But we all have to worry about this and this. And then the next one everyone's worried about is when they're trading, that they're taking more trading losses than they need to. The market's much more volatile, much higher probability on losses. That could be both at if you're doing your own trading with your own positions or relying on a advisor. um, there's more of that. And the worst part for most people is just basically running out of cash. I can speak from firsthand experience with a grandma that lived all the way up to 104. She did the right thing. My dad did the right thing to get savings to extend it all the way up to her age of 99. So she was okay financially up all the way up to the age of 99 until the day she quite literally ran out of cash. So she ended up in a government subsidized home, retirement home. Believe me, man. Believe me, if you don't want to have dignity, you move into one of these facilities. It's very, 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 very bad. So if you run out of cash, you're in real trouble and you're really dependent upon the government to take care of you. You are going to have real hard times. Like forget what you're going through now, but to live under those kind of conditions, 100% depend upon the government, you're screwed. And that's why they're bringing the CBDC, central bank deposit, central bank digital coins, and that whole you'll own nothing. I mean, this is where we're kind of going. And now they're trying to also rule you cannot use alternative like crypto. I've already put up videos on that today alone. So yeah, it's hard. And somebody on my Facebook said it, and it was a great quote. I'm older. He didn't say this, but I'd also say you're fatter, older, fatter, um, poorer as you're going into retirement, and now you're working harder to sustain what you already have. And that's a very, very realistic for probably everybody, no matter where you are at on the financial scale. So coming back to the article, job security, I really not sure about that. And our cryptocurrency is recession proof. So again, what will you do? So all of this one right here, diversifying your investments, 100% true. Problem is being able to time it to be able to get optimal return. And um, again, you got inflation going against you. That's a form of a tax. You have probably could happen if you're in the U.S. long-term U.S. dollar decline as well. If you just plan to stay in the U.S. and go nowhere else, that's fine. But it's going to get more expensive for you to travel as your dollar declines, and that will get more expensive. So all of this is against you. So what to do? Okay, so that's what I do. Let me get into that first. Um, right here, as I talked about, if you want to know more, go over to quantlabs.net/books. Basically, what I do is I post daily stock picks, ETFs now as well, and my watch list. For a while, I was beating the market, but now we've hit, as of March 8th, more turmoil, and it's harder to beat the market, but it can be done. You just got to tighten what you put into and lower your probability of taking on financial losses. So, timing is everything. Knowing what to invest into. That's what I do with these stock picks and ETF picks. I also put out alerts pretty well close to a daily basis now on the world region on what's growing and what's not. That could be forex currencies and via CFD and indirect poor man way to other areas like uh, treasury, uh, agriculture. Uh, what else we got? We've got currencies is a big one, and regional stock market indices throughout Europe, Japan, Hong Kong, Singapore, and US. Okay, so it's a really good high level, and metals as well, high level where to put money. So one thing we've not talked about, neither did this professional so-called diversified. If things go to bad, agriculture is still going to be very, very valuable. It did very well in the inflation time, so you could have indirectly gotten back and hedged against what you're paying out for food and energy. You could have put money into oil. You probably would have been able to hedge that loss on the inflated inflation costs, as an example, if you knew how to do it, when to do it specifically, and same with food costs as well, because you could have bought into ETF, call it investments based around certain food product. Usually the four agricultural product are wheat, soy, corn, and sugar. I think there might be another one in there, but usually there's like four, and wheat. So there's about five, let's say, that are base industrial, base agricultural products that are used throughout a lot of the food. So there's those kind of things that you may not think about that you can use to help you hedge on losses. Maybe I should do this. If just as a hint of where to go, a really good place to go is Bart. Like if you go to the Google machine and look up bar chart, okay, and just look up bar chart most active futures. Now we're talking futures, okay. This is the futures market. This tells you right now where some of the high capital flows going currently in the market conditions we are in. Money going into S&P 500. A lot of other money's going into T notes, Treasury, and there's the order. So as I said, money's going into yen because it's strengthening. T bond, Russell, uh, forex. So right there, it's not as high as gold. Actually, sorry, as gold's higher. And overall, the volume set says that, as well as probably the returns over a certain period of time. And as I said, you get into now corn as another way to diversify, natural gas, and so on. So you can see right here from this list, different areas you can invest that will give you profit. As an example, where to go. So you have some currency here. And again, that article did not mention that. So this is the real way how to do it and follow hot capital where it's going to get returns. And that's one of the things that I watch and post every day. So if you want to know more about that, that's cool, right? The next thing, what I do is you'll go, okay, I know the timing, I know all of the different things on what to pick, but the timing is the big one. But beyond that, can you do that as a human? No, absolutely not. So I use a platform, MotoWave, to do all the automation for you on Interactive Brokers, which gives me access to over pretty close to 1,000 ETFs. That's pretty diverse, plus currencies, plus crypto, plus stock and equity as well, or ETF as equity. And from there, you got various strategies for if it's a swing trade or if it's for uh, what do you call a swing trade or a volatile price line or just trend following. So I have different strategies with source code that you can control and use to deploy on what's moving. So you can get consistency on profit. That's how you beat the general S&P 500. But this is another free way to gauge what's moving in the futures market. And it's a futures market that gives direction on where, again, as I said, the hot capital is flowing. You'll see here, um, crypto, Bitcoin specifically, is not here. So let's see what comes up in the hole or in the more. It's still circling around. Looks like it is. Yeah. Anyways, I'm not going to get into it, but you're not seeing crypto. That was my whole point. So that's where it's at. Um, take it or leave it. Most people will be getting poorer. Some may become destitute because of career, because of Chat GPT, but there are options to get around that. So it's up to you. As I said, with my stuff, you can get that at quantlabs.net/books to learn more of what I do. Alrighty. Thanks for watching. Have a good day.